I'm sorry about the breakdown. Uh, I don't know. Zoom is just. I'll try and work on it. I God's grace so that the testing will be good. So let me continue. Okay. So just give me a minute so that the rest can join. Someone wants to join so that I can start talking about leverage. All right. All right. All right. Okay. So let me move back to leverage. Leverage. All right. Leverage. Now, leverage is an amount of money that is being lent to you by the broker to do business. So this is an amount. We've talked about the lot size, and I said by the time you calculate, multiply the units, 100,000 units, 10,000 units, and 1,000 units by the price you want to trade, either selling or buying, you'll notice that you don't even have enough money. So this is where leverage comes in. This leverage now helps you to trade the forex market with higher capital. So now, how does this leverage work? How does this leverage work? Now, we have different types of leverage, which I'll be explaining. Number one, you can write it down. We have 1:10. In fact, let me type it out. Let me type it out. That's why when we were opening the XNET demo account, if you remember, I told you we should use what? If you can remember, I told you we should use what? 1:500, if you can remember. So that is another example of leverage. So I'll be writing some of the examples of leverage out. Number one, I have 1:10. Some leverage are 1:50. So just know that the higher the leverage, the higher the risk you are taking. Some are 1:100. Some are 1:200. Some are 1:500. Are you getting? Some are 1:1000. Some are 1:unlimited. Unlimited. We've seen some brokers that provide very crazy leverage, unlimited leverage. So all those people, they can trade using bigger lot size, but just know that if it goes against them, they are also losing money. So, but for this course, we said we should stay on 1:500. 1:500. Do we understand? If you understand, just type yes, I understand before I continue. Okay, type yes if you understand what I've done so far. Type yes so that I can continue. Okay, thank you very much, man. All right, now how does this leverage work? These are the different examples of leverage. You also can Google it. You can go online and Google different types of leverage. You are going to, in fact, let me Google it right now. Let me share my screen so that you see it. Let's Google it together. Let's see what Google is saying. Or in fact, let me log into my XNES. Let me log into my XNES. Can you all see my screen? If you can see my screen, just type yes, I can see it. Let me log into my XNES account. Let me see. Have you typed yes if you can see my screen? All right. Thank you very much. So let me log into my XNES account so that you see different types of leverage in XNES. All right. Let me log in. Now it has opened. It has opened. It has opened. All right. So let me try and open an account, either live or demo, an account for you to see it. Let me try demo so that you see how the leverage works. Okay. Now try demo. Now just pay attention to this platform, trading platform, MT4. Now look at it, max leverage. Can you see it? What can you see here? Can you see it? 1:2, 1:20, 1:50, 1:100, 1:200, 1:400, 1:500, 1:600, 1:800, 1:1000, 1:2000, and 1:unlimited. Can we see that right now? So we have different types of leverage. You understand? Different types of leverage. So that's why I said leverage is an amount of money that is being lent to you by the broker to do business. You understand? Because the lot size you are going to be using to trade is high when you multiply it by the amount of units, 100,000 units, 1,000 units, and 10,000 units by the price you want to buy from. It is very high. It is a very big money. And you have just $1,000 to trade. How can you achieve that? This is where leverage comes in, where the broker provides you money. Now, let us go back. Let us see this leverage. Let us look at the one we are using. We are using, I told all of us to open a demo account with 1:500. Now, let us do the calculation right now to know the amount we are doing. So let me open my whiteboard for you to see it. Let's do the calculation together. So we are all trading using a leverage of 1:500. 1:500. Now, how do we do the calculation? So if I am trading using 1:500, 1:500, and I have just $100, I funded my account, either live account or deposit account. I have $100 with a leverage of 1:500. Now, what am I going to do? That is $100, my $100 that I have in my live account times this leverage amount, 500. So what is the answer? So it means I now have $50,000 to trade Forex. Hallelujah. Praise the Lord. Can you see that right now? This is the power of leverage. But the higher your leverage, the higher your risk in the market. Can you see that right now? I have just $100. That is my amount I have. And I want to trade live accounts. I don't have $50,000. I don't have $100,000. I don't have $1,000. I only have $100,000 and I want to trade Forex. Because I am using the leverage of 1:500. So my $100 that I have that I want to use to trade Forex times the 500, which is the leverage. So that means automatically the broker credits my account with $50,000. But you will not see the $50,000. I repeat, you will not see the $50,000. All that is going to show on your account, on your trading balance is $100. But at the back end, I've done a little bit of programming. In building a website or building software. We have the front end and we have the back end. The front end are the one that built everything you see on the website. Like this XNES website we entered now. Everything we are seeing there, it is built by the front end engineers. While the back end are the one that take care of the server side, the database management, the security side, and every other thing. These are done by the back end. You don't see what they do. You only see what the front end does. So same thing goes here now. You are seeing $100 as your trading balance, but at the back end, it has been credited with what? $50,000. So the broker borrowed you $50,000 so that I can be able to trade the Forex market well. But let us say, for instance, I have $1,000 as my trading capital. So that is, and I'm using a leverage of 1:500. So that is $1,000 times the 500. What is that? That's 1,000 times 500. So that means I have $500,000. $500,000. Can you see it? $500,000 to trade the Forex market. But meanwhile, my trading capital is reading $1,000. But the broker has lent me $500,000 to trade the Forex market. Now, you know the beautiful part of it is when they are trading using the leverage, the broker drops 99% of the money. Why? It takes 1% of your money to trade the Forex. So if the market is going against you, Because the broker have borrowed you money and they are the one that offered you the platform for you to trade, they quickly secure their own money. They quickly what? Secure their own money so that it won't affect their own money they borrowed you to trade. And the loss will not be debited in your own capital. That is why when you are trading Forex, when you are trading demo account or live account, the loss is always debited in your life, in your account. But the money they borrowed you to trade, they secure their own money. So when you are in loss, they quickly secure their own money. The loss will only affect your own capital. It will not affect their own capital. And this is the beautiful part of Forex. That is why I said part of the ways to solve Nigerian economy is by Nigerian government giving guys that are good in Forex to trade Forex. And I promise you, in less than 3 years, we'll pay up the loan we are owing China. I'm serious. That's just the gospel truth. Companies, business conglomerates give Forex traders millions of dollars, billions of dollars to trade Forex for them. In fact, most of the politicians we have right now, because of the fact that Forex is legal and the kind of transaction they go on, they put their money, the money they steal in government, they put it with the Forex traders. So do you understand now? This is the power of what Forex can do. Forex, the profit you're going to make on Forex, if you are a business owner, you might not make that profit in 1 day or in 1 year while doing your business. That is Forex for you. So now let us change this leverage to 1:2,000. 1:2,000. I hope you understand. If you understand, type yes. Type yes if you understand. All right. Thank you very much. Oh, thank you very much. Thank you very much. All right. So now let us say I used, when I was opening my life account, I did not use 1:500 as my leverage. I used 1:2,000. And I am trading a $1,000 account. I fund my account with $1,000. So that is what? 1,000 times 2,000. So that is equals to what? Calculator, 1,000 times 2,000. $1,000 times $2,000. So that means the broker will provide me with what? 2 million naira. 2 million naira. 2 million naira. But if I'm trading with a $100 account, if I funded my account with $100 and I'm using a leverage of 1:1,000, 1:2,000 rather, it means $100 times 2,000, the leverage. Abi? So that is equals to what? 100 times 2,000, that's equals to what? That's equals to what? $200,000. So the broker will provide me with what? $200,000 to trade the Forex market. So that is all about the leverage. So the second, the last but not the least, equity and margin. Equity and margin. Equity and margin. We're going to talk about equity, margin, and free margin very quickly. Very quickly. Then we'll not talk about the others. You know, we've done different type of orders: buy limit, sell limit, buy stop, sell stop, and market execution. But some of us don't know what it means. So let us talk about that very quickly. So equity and margin. Equity and margin. Let me send something to the group so that you can understand what I'm saying. Everybody with their phone, you can go to your MT4, open your MT4, then go to open your MT4, then go to your balance where you have your balance. I'm also going to send screenshot of my own right now to the platform so that you see what I'm talking about. Okay, I've sent something to the WhatsApp group right now. Let me download it so that we can see it. I hope you can see my screen. If you can see, just type yes. If you can see, just type yes. All right, thank you very much. Thank you very much. So very quickly, let's talk about equity and margin. Now, if you open your MetaTrader 4, you are going to see this. Go to where you have balance. You are going to see balance, equity, free margin, margin level, and then margin. So let's talk about it. What does it mean? Very quickly, what does this mean? We've been hearing margin, margin, equity, this, that. What does this mean? So that we'll not be confused, so that we can know what we are trading in the Forex market. All right, give me a second. So let me quickly tidy up something. Let me charge my laptop. It's running down. All right. All right. Okay. Now let's continue. Now, this is the balance, equity, free margin, margin level, and margin. Now, the balance, your balance is the total capital you have in your account. Balance is the total capital you have in your account. That's the total capital you have in your account. That's your balance. That's your balance. Now, why the equity is the balance plus profit or loss? What did I say? Equity is the balance plus profit or loss. It is also margin plus free margin. Now, what does that mean? Going back to this, look at, I have this trade running. I've not closed it yet. It's still in loss, but I believe it's going to retrace back. That is why I've not closed the trade. I didn't put my stop loss. I'm not saying you people should not put stop loss while trading. No. For now, put your stop loss. But me, I didn't put my stop loss because I knew it's going to reverse back. That's why I left it. And because I'm trading a low risk, I knew my money is not going to go immediately. So that is why it is it. So this is my trading balance, $103. $103. Now, equity is the balance plus profit or negative. So that means if I am running a trade, and is in loss, it's going to show on this equity here where you are seeing equity. It will not be this minus this loss. But if it is a profit, it will not be this loss, this. Do we get that? But that balance remains where it is. Whether the profit, for those that are taking trades, the balance remains, it doesn't move. As long as you've not closed your trade, either in profit or in negative, it still remains where it is. It still remains where it is. But by the time you place a trade and it's beginning to run, and the trade has started running, either in positive or in negative, then it begins to read on your equity. That's why I said equity is your balance plus profit or negative. So it means your equity is your profit plus your balance, or your loss plus your balance. That is, if you are in profit, look at this trade now. It is GBP JPY, I'm on minus $1.49. And AUD JPY, I'm on minus $3.76. Look at my equity here. It's showing 97.85 but my main balance is still showing $103.10. So that means if I close these two trades now in loss, my balance will now be 97.85 cents. $97.85. But because the trade is still running, I have not closed it. My balance still remains as $103, and my equity remains as what? $97. You understand? So that is why I said equity is the balance plus profit or loss. And I state it here now that equity is also the margin plus free margin. Margin plus free margin. Now let's go back. This is the margin. This is the free margin, $94.08. And this is the margin, $3.77. Now, equity is this $94.08 plus $3.77. That is what makes up this equity. Do we understand? That is what makes up this equity. So that means if I am running a trade right now, and I am trading with $1,000. For instance, I am trading with $1,000 and my margin is $100. Do you understand? $100. So that means I am $100 minus $1,000 It means what? That margin is that 1% that you are using to trade. Okay, let me define margin so that you will not be confused. Equity, like I said, is the profit, is the balance plus profit or loss. And it is also margin plus free margin. So margin now is the amount you need to open a trade on any currency pair. So that means the minimum amount you need to open a trade on any currency pair is your margin. For me, because of my trading capital is low, so my margin is $3.77. That is the minimum amount I need to open a trade. But do you understand? For some people, their margin might be $1,000 because they are using a bigger capital. But my own margin is what? $3.77. You also can check your own MetaTrader 4 while you place a trade to see the amount of margin. So the minimum amount used to open a trade is your margin. Now, the free margin. Sorry. I'm sorry. I'm sorry. I'm sorry. I'm sorry. I don't know what's wrong with Zoom. Zoom wants me to upgrade the account, man, but the dollars, man, it's too much. It's too much. It's too much. Okay, let me share my screen again. It is there. I hope we are all getting it. It's a very powerful topic. I want us to cover this once and for all so that we can move to the next phase. Okay, let me share my screen so that I can continue from where I stopped. All right, let's continue. So let me open the trade again. Now, we are talking about equity. I said equity is the free margin plus the margin. Why margin is the minimum amount you need to trade any currency pair. And my own margin here is $3.77. Now, what am I trying to say in essence? Let us say, for instance, I have $1,000 account. I am running $1,000 account now. Do we understand? I am running $1,000 account and my free margin is my margin rather is $100. My margin is $100 and I am running what's it called? $1,000 account. Now, if I take a trade, let's say I take a trade now and I lose $200. Okay, let me present it. Let me show it on the whiteboard so that you understand what I'm saying. Let me show it on the whiteboard. All right. So this is it. I am running $1,000 account. I am running $1,000 account and let me draw it something like this. So let's say here is my margin, which is $100. Remember, it is a $1,000 account, $100 now. This is my margin. And what did I say margin is? Margin is the minimum amount you need to trade any currency. So this is the margin, $100. And above here is what? $1,000. $1,000. $1,000. Now, let's say right now, I lose 200. Let's say now I lose 200 there minus 200. Now, before I continue, if you do this calculation, what will be the equity right now? If I lose 200, can somebody type out what will be the equity before I continue? Anybody? 800. Thank you very much.